When it comes to the market, I'm ready to basically sell, take profit significantly in the next week, 10 days. Stay long, but take profit, because there's so much good priced in, I think, relative. Like, we just went up 9 days in a row, right? We have S&P down 77 basis points today. It's nothing. So if wrong and everything rallies very hard, there's plenty of times to get back in, right?
Hi, everyone. Welcome to Bits and Bips, exploring how crypto and macro collide, one basis point at a time. Today, we'll be talking about macro, tariffs, Scott Bessent's comments recently, Warren Buffett, stablecoins and stablecoin bills, and obviously crypto. But first, some quick intros. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg Zen. I'm here with Alex Kruger macro of House Asgard, protector of the realm.
Hi, everyone.
Also with us is Ram Alawalia, Maester of Wealth, leader of Lumina.
Hey, guys.
And today we're joined by Katalin Tischhauser, strategic enchantress of the Signum Order. We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bitsandbits for more disclosures.
Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO Memo. Carefully consider the extreme risks associated with crypto before investing. Big news. Unchained just launched a brand new newsletter, Bits and Bips. Just like this podcast, it's all about how crypto and macro collide, one basis point at a time. Get expert analysis, market insights, and the biggest stories shaping both worlds, straight to your inbox. Subscribe now for free at bitsandbips.beehive.com. That's bitsandbips.beehive.com. Find the link in the show notes.
All right, guys, before we dive in, Katalin, it's late for you over there in Europe, but why don't you give some people a little bit of background on who you are and what you guys do, and then we'll get into things.
Yes, certainly. And thank you for the fun intro at the start. I'm head of research at Signum Bank in Switzerland. Actually, the bank is headquartered in Switzerland and Singapore from the start, and now expanding internationally increasingly. Signum is a crypto native bank built from the ground up with no legacy ownership and no legacy infrastructure, conceived in 2017, incorporated in 2018, and we got our Swiss banking license in 2019. We offer the full spectrum of banking services to crypto clients: accounts, lending, brokerage, custody, and so on, staking, and also asset management, investment, tokenization services.
Great.
Can I take a loan with Fartcoin?
Yeah.
Good collateral only, Alex.
We're working on it. Swear words are frowned upon in Switzerland, so we're trying to have a workaround.
All right. Let's just start with macro, I guess. We have negative or really flat GDP. We can get into the jobs data, the outlook. Trump is suggesting there's a bunch of trade deals that are going to come as soon as this week. I can keep going on, but I'll turn it over to you, Ram. What is your view on the macro topics of the day?
Well, we just concluded a 9-day winning streak in the S&P. It's only happened once before. Would have been 10th day today. I think that's just a local top. It's one of the most obvious local tops you can get, at least for a few days. So I think peak PTSD is behind the world on tariffs. You can see that with the decline in the VIX. You had the resumption of share buybacks with earnings season. And you've had strong reporting on earnings, right? On average, they've beaten expectations, which were lowered. So all that's been bullish. And then the talk from the admin has been bullish. And there was a full court press last week, like almost wall to wall, almost every day. Well, but it's all been in the spirit of talking up markets. Then Friday, you had a non-farm payrolls beat that came in strong, very much on the high side of expectations. That led to a gap up in markets, a lot of enthusiasm on a Friday. A very, very classic sell Monday setup and weakness, probably for a few days at the very least. Although, I got to say, it's quite an interesting setup because if you look at hedge funds out there, their net exposures are very low. And if the S&P continues to perform, they can get caught up in a performance chase. They can't really buy more. Their gross long is at 98th percentile. So really the only action they can take is one of two things. They can sell gross longs. They haven't. They didn't do that through a wild correction. They're not going to do it now. Or they can cover their shorts to increase their net exposure. So overall, I think we're in a buy the dip regime, although the question of kind of the macro turns on the end state of tariffs, which still isn't clear.
You want to go, Katalin?
Yes, I look at fundamentals and zoom out more than whether the ninth day will be followed by a 10th day. Actually, well, as it happens, it wasn't. But it's actually interesting that 9 days, it has very rarely ever happened, like 9 consecutive days. But interestingly, after 9 days, it almost never went on to a 10th. I think it has ever, but mostly it hasn't. So there's something special sentiment-wise, clearly about the 9 days. But I think to me, it's I see actually the fundamental picture improving going forward. I'm not really basing it on Scott Bessent's comments or Trump's promise of various deals. I see that more a necessity. Basically, the way the administration went about the tariffs was not gonna work. It hit a wall with reality. If the objective was, and I don't think that was the primary objective, but if the objective was reshoring industry to the US and reduce or cut dependence on China, this would not have been the right policy package to go forward with. And I think the objectives probably were slightly different than what was stated. If the objectives were what was stated, then they did a poor job of it. Basically slapdash, not thinking through the supply chains. Apple said 80% of our phones come from China. What are we going to do? And just there's a host of industries and products where the US is deeply, deeply dependent on China that are indispensable. And, Trump kind of gave this interview saying that, well, the children will have fewer dolls, but actually it's not about that at all. It's antibiotics, it's anti-inflammatories, it's rare earth minerals, is essential products for also the defense industry and the whole host of things where the US is deeply dependent on China. And cutting this off, I think maybe it was a bluff that China will break, and they didn't. But basically, it sounds like it wasn't so true. If you want to reshore industry, there's a certain policy package that should go with it in terms of infrastructure, education, and also a certain graduality of how you replace your supply chains. And actually, when I say I think they had a different objective, I base it on what Scott Bessent said a few weeks back, which is that they want to use these 90-day negotiations to get other countries to basically blockade China. And I think that was probably the primary objective, and reshoring industry the secondary, and that's why it was executed like that. But basically, this didn't work very well. First of all, China didn't crack to start with. They saw it coming and they were prepared. Various industries raised the alarm that there's a problem with supply chains. So immediately there was the 90-day, pause, and then the various carve-outs ever since. And basically, I think the policy package hit reality. And now what is happening is more and more carve-outs, also some carve-outs from China towards the US. And basically, the situation seems to be normalizing and moving out of necessity in a direction that is much more positive, workable, and favorable. So I think the news flow on tariffs from here on is going to improve. The bad news is kind of in the price. there's a lot of, out of this, a lot of global slowdown. And I'm not talking about the US GDP. I think that was primarily a technical one due to imports being brought forward, right? Because imports are a minus in the GDP calculation. But generally, a global slowdown to some extent is in the cards, which means liquidity provision by central banks. So I actually see this setup from here on with everything in the price as quite positive.
Yeah. So I'll go to you, Alex, in a second. But like, I kind of tend to agree. Like, if their goal was to like do more onshoring, like Biden was kind of doing that with the CHIPS Act. Like, it seems to have been at least successful from the beginning. The Inflation Reduction Act had aspects of this. Seems like we've been saying on this podcast for a while. It seems very haphazard. The rollout, even if you wanted to do targeted tariffs, which I know plenty of people are against, like it would have made more sense to go it that way. But I want to go to you, Alex. Like, do you think what we've seen these 9 days, this is a bear market rally, or have the impacts of like what's going on in these tariffs not hit yet? My view is like, I think we might be in like a bit of a mirage. Like we haven't had any of the impacts really happen just yet. So if they're going to happen, the impacts from what Trump has done and what this administration has done, my view is like it's likely to happen in a few weeks, few months from now. And then we'll see how bad it really is. So we could be in a process, right? I think back to like one of the elections where they kept talking about the mirage, like the blue wave mirage because of the early voting, and like don't focus on those because we need to wait till we get more of the votes in. Like I feel like we could be in a situation right now where we're kind of like in this mirage of like kind of stagnant or at least somewhat positive macro indicators, economic indicators. And if there really isn't a ton of those carve outs that Katalin was just talking about, we could actually not be past the worst of it. I guess, Alex, what do you think we're in a bear market rally, or do you think like the worst of it is past us?
To be honest, I don't really know. That's the thing. And I think we will know by basically, we have 60 days to go for us to know where we're heading. And in the meantime, it's very high uncertainty. In the meantime, the macro data is not important. It's about the headlines, and it's about basically signaling by the administration that they want to be friendly towards the rest of the world.
What's priced in though, Alex? That's another way to look at it, right?
I think a recession is not priced in fully. It's like, in fact, that's there is numbers. I don't have them in front of me, but it's. I don't think the market is pricing in as much as it should.
Right.
But what it should is so subjective, and we don't really know what it should at the end. It's like it's hocus pocus because
100%.
we don't really know what's going to happen. What I wanted to say is like the main thing is it's on the tariffs. I think it's important to split it in three. One is it doesn't mean the end of the world or everything collapses. It does mean that equilibrium GDP for the US and the world is a little bit lower. That's one thing, and that's very long term. That's not for traders to be worrying about. Then we have the fact that the hard data is going to start getting bad in late May, June, not before. So basically, it's something you start seeing in June or July, maybe August, not before. We have the GDP data right before. The GDP put basically negative growth for the US, was close to consensus. The reason that there was the country started front-running imports. And basically, just mathematically speaking, higher imports, lower GDP. And at the same time, on the other hand, to balance that, half of the higher inputs was balanced by basically higher inventories that fits into investments. What's going to happen in Q2? We don't really know if we're going to see the same or the exact opposite. We could actually see the exact opposite. The consumer was relatively strong. I think it's fair to think that consumer slowdown, we only see that in Q3. So what's Q2 going to do when it comes to the macro? It's an incognita. And again, more important than that is guidance from Trump and Bessent, I think. And finally, when it comes to the market, I'm ready to basically sell, take profit significantly in the next week, 10 days. Stay long, but take profit because there's so much good priced in, I think, relative to, like, we just went up 9 days in a row, right? We had S&P down 77 basis points today. It's nothing. So if wrong and everything rallies very hard, there's plenty of times to get back in, right?
I like the summary. No, I agree. I mean, there's a lot of good news and optimism priced in around trade deals and peace deals at this point. And if they execute against those trade deals and market expectations will be met. It's hard to exceed them, at where we are now.
This is something is interesting before you go into that thing. And just quickly, is this thing that we have this political chasm, right? Like left and right, more divided than ever because of Trump. What that means basically is there's a lot of people that get very biased, and just because they know that everything is going to go to zero, the macro, or I'm being hyperbolic, right? It's very easy. Let's forget about the day. It's very easy to get dragged into political biases and ignore the fact that the economy is not the market. And if the conditions are right and markets see that the economic, even a recession is going to be just 2 quarters, and then things are going to be good, markets should continue going higher despite some volatility. And on the other hand, you have the very strong Trump advocates that they refuse to see no wrong. They stick to the plan. And if things go bad, they're going to suffer. So it's I think it's important to be somewhere in the middle and flexible.
I would agree that data at the moment, they don't really matter too much. Anything that happened prior to Liberation Day is already discounted as old news. It doesn't reflect the impact of the tariffs. And if the news flow, as it has been improving, if it continues to improve, then the bad data that we are going to see, I think, will also be largely ignored and discounted and say, well, that just reflected that initial shock, but that's behind us and everything is improving now. I think the data tends to have an impact when it's kind of worse than expected in some areas. So, for example, the PCE, we would have hoped that we go into the Liberation Day and the tariff situation with somewhat lower, it's likely surprise to the upside. Something like that, I think, matters, certainly in terms of how the Fed will react and how they think about everything. But generally, a lot of the data right now, if it was before Liberation Day, it doesn't matter, including corporate earnings, including economic data. And now the next April and the current month, I think if things improve, then it will equally be just shrugged off as, well, yeah, that's in the past.
Yeah, I'm just going to share this again, which was on the screen already. But this just kind of feels like what happened the last 8 days or so. It remains to be seen if this is actually what's happening.
I think it is. Look, the liquidity markets are so thin, combined with the fact that retail investors are buying, give this unusual phenomenon where the retail investors are bidding up markets, and it's that red curve that's bidding up markets. You can see it in animal spirit names that have run up quite a bit, but they're taking a breather today. You can cheerlead markets for like a week at best. A lot of cheerleading, including today with Bessent and Milken, because he gave a very short speech and he said the U.S. always bounces back, and he cited the Great Depression, the Great Financial Crisis, and that and the other thing. But what?
Well, the Great Depression took 6 years now,
and it was exacerbated by terrible policy response, right? It was exacerbated by the Fed withdrawing liquidity and Smoot-Hawley. The difference is, what's our policy? It's like the United States can get off the mat with a good policy response. It's not like it always gets. There's such a thing as bad policy, which can just weigh on earnings. I thought the point earlier around the lower growth expectations for the United States and for the rest of the world is very accurate. In the long run, that's very accurate. No question. Short term, it's all technicals.
I'm curious, Katalin, what are people saying in Switzerland? And you're in Zurich, right?
Well, I mean, at this time of the day, I'm at home, which is not exactly Zurich, but striking distance.
I'm wondering, the mood in the office, right? People working in finance that you see, that you talk to, what are they saying about what's happening with Trump and tariffs and so on?
Well, I mean, on the surface, I think the general reaction is that it makes no sense. The policies as they were proposed then started to be implemented make no sense at all. They're self-destructive. They're hurting the US. Obviously, they're hurting the rest of the world as well, but they're not actually achieving the stated objectives of reshoring industry and cutting China well, you can cut China dependence by cutting off trade entirely, but that causes a whole lot of problems. So that doesn't make sense either. So the superficial opinion is generally that incompetence, right? Like that's the superficial impression. It's not my opinion. I'm just, you asked me what people generally think,
Yeah.
and I think the general impression from a distance is that this administration is not doing a great job and they're not very competent. It's not my opinion personally. I think it's more that they're working to different objectives than what they say they're working to, and actually they're very smart.
Yeah, I mean, that's what you hear from people like David Sachs in the All In podcast has been saying, like, look, this conversation's happening. This conversation hasn't been happening. Now we have people okay with 10% like global tariffs around the world. Like we've shifted the window of like what people think is acceptable and it's going to be better for the country. And like that's their argument. But at the same time, the rollout, as we've said a million times, just feels broken. Like it feels like they did it. It wasn't thought out very clearly. There's only sticks, no carrots. Like there's just something just doesn't feel right. And I think that's what most people feel. And I guess that's what Europeans feel too.
That is the impression. And I think to me, because I actually think that the administration is full of incredibly intelligent people. And I find it very difficult to conclude that they just didn't think of.
I disagree. It's incoherent. It's in the messaging coherent across people, across Bessent, Lutnick, Navarro, and Trump. Across the four of them, you get different messaging. It's not aligned. Trump this Sunday was interviewed. He said, "Look, he said, look, Americans have to deal with $3, not $30. My daughter has $1, by the way. My daughter has $1. I don't know what the $30 is about." But the other comment he made is he said, we're getting ripped off by China $5 billion a day. Now let's think through that. Because look, if you hear the same thing 1,000 times from your leader, your president, you generally want to respect your leaders and presidents and their thoughts. You start to believe things, right? But the United States Treasury is not writing a $5 billion check to China. We're not writing so it's clearly the United States is not getting ripped off. So what's really happening is Trump is saying that Apple and Nike and the doll manufacturer and the toy man, that all of them are getting ripped off. They just don't know it. That they're engaging in voluntary contracts to import at a highly negotiated cost from China, and that the decision they're making is wrong. And he's saying, Trump is saying he knows better than those companies, and they're getting ripped off and they don't know it. But that the government knows better.
Very dangerous message, I think.
Yeah, I mean, obviously, what he means is like what China gets paid for these products is a fraction of what the U.S. companies that import the certain components and whatever get paid. So it's not that. I think what he means is just simply the trade deficit with China that shouldn't exist. That shouldn't be there. That's the ripoff. And but to me, like when you say the messaging is different from various people in the administration, that to me sounds like that's exactly what would happen when your stated goal is different than your actual goal. So you're trying to not say what you're really doing, and you're trying to say something else, and then it kind of sounds confusing and inconsistent across. Bessent phrases it differently, Trump phrases it differently, and none of them are saying what they're actually trying to do.
It's not just the phrasing; it's the substance of what they're saying, though. Right? The substance of what they're saying is different. Like today at Milken, Bessent said we might get frictionless. Like we expect more frictionless trading, which is what I want to hear. Fantastic. He's the only one saying that. Trump the day before saying we're getting ripped off. Who's getting ripped off? Who show me the person getting ripped off and what decision they're making.
The middle class people that are losing jobs to manufacturers in China are the people he's arguing is being ripped off. But part of the problem is he's looking at goods, imports, exports, and all that stuff. Meanwhile, you have Apple and like other companies making billions and billions of dollars in these other countries that aren't showing up in these trade deficits necessarily because it's just on these companies' balance sheets. So it's kind of like I don't know. I don't know. I think it's warring factions. I don't think it's necessary. I don't think they're all on the same page, and we know that because there was a story that came out about Lutnick and Bessent sneaking into Trump to like steal his time away and get him to tweet out that thing about the pause in tariffs and things when Navarro and other people weren't around. Like, I just think there's like literally warring factions about like what these tariffs are.
100%. Check out this clip. This went viral today, 11 million. This is Shenzhen. I was in Shenzhen.
Inhaling, or if it's like a. So this step kind of blows my mind. Our friend here is.
I mean, okay. That's a job. Who's ripping who off here? That's which American wants the job to load up on vape pens? I mean, we're exporting cancer to China, and we're importing record earnings for Philip Morris, which is at all-time highs. So we're saying, oh, Philip Morris, you're getting ripped off. You don't know you're getting ripped off. You don't know it. You're getting ripped off, buddy. We're going to tariff you 145%, Philip Morris. So you stop doing that, and that's what's actually happening here.
Again, they would say it's not Philip Morris that's getting ripped off. It's the people that are losing jobs. But then again, I mean, that specific clip is ridiculous because there has to be a better way to test those.
Who wants that job? Who wants that job? Who wants their daughter or son to have that job?
Let's get into Bessent's op-ed real quick. Does anyone have any strong thoughts? Like, I'll just read you some of the quotes. It says the president recognized the critical role of Wall Street in financing the American dream, but Main Street turned to share in the prosperity. Again, that goes back to what we were just talking about. He's talking about people whose jobs are potentially moving overseas. This is how we restore the working class, reestablish the U.S. as an industrial powerhouse. These are all things that he said. Honestly, my question on this is, one, I don't know if you have any thoughts on the things that Bessent said. He kind of is saying the same stuff he said in weeks past. Where do you think the stock market would be if Bessent wasn't a key part of this administration, I guess?
Bessent is the fig leaf for the economic policy. Behind the fig leaf, it's raw, and you don't really want to go behind the fig leaf.
Okay, Alex, do you have any thoughts on Bessent?
No, I think he's the best the best there is, and yeah, vaping is illegal in Thailand, but yeah, I think he's the best there is in the administration. Like, without him, the stocks the S&P be 10% lower or something like that. I don't keep a log on whatever he says, but I've caught every single person in the administration saying things that are factually wrong, like awfully wrong, to the point that you go and makes you think, do they really believe this thing? Is it part of an orchestrated maneuver tactic to misinform for votes or for generating chaos? I don't know, but at the same time, I mean, we can talk about this and we can get outraged and we can yap and, go back and forth and entertain ourselves. But those things don't really move the market unless we go to some extraordinary extremes, like what happened on April 2nd, right? And their formula. Otherwise, it's okay.
To your point,
I think Bessent is very good. He's very calming. Makes me think of Powell. He's very commanding and calming, which is what we need.
Yeah, Bessent knows how to talk to markets. But, to your point, remember the April rollout of these reciprocal tariffs, they were anything but reciprocal. If they were reciprocal, you'd have a 3% tariff. Because that's the average global tariff, actually. Around 3%. You wouldn't have placard cards at 25, 40, 50%. It's not reciprocal.
Yeah, I mean, I go back. The way I think about it with Bessent specifically is like what friend of the pod, Quinn Thompson, said. I want to be Bessent when I grow up. Like, he just seems like he has everything together. Whenever he talks, he kind of calms the market. He just seems like he knows everything that's going on. And sometimes you see some of these other people from the administration going on, and you're like, I don't understand how somebody's saying this stuff. Like, to Alex's point, like that it's just factually inaccurate, can be in such a position that they're in. But that is the world we live in. I guess let's go to Warren Buffett. Ram, I know for sure.
James, before we change subject, I'd like to share a chart with you. It's basically a chart showing how basically U.S. Industrial production has been trending higher for decades, and so same with manufacturing output, and then you have manufacturing employment in the U.S. pretty much plummeting. I think it's worth sharing, and here what I wanted to basically say around this is, by the way, is AMFX. It's a chart by Brent Donnelly. The point here is that if the goal of administration talking economics is to basically bring back manufacturing jobs, that's a wonderful thing to talk about for boats, but it's the wrong thing strategically to do long term. That chart shows you that's not China. That's basically the fact that the manufacturing is just becoming more and more efficient, and progress in technology, it just accentuates and accelerates this trend.
The other part to this is, like, if you listen to people who know trade and what's going on, for the most part, from the last time that Trump instituted tariffs and Biden basically kept them on in many areas of the economy abroad, that we've been pushing away from China. It's a bipartisan issue, right? Like both sides of the House and Senate kind of agree that China, I won't say enemy, but they're not exactly our ally, and they're trying to push us away. So anyone who can like take their manufacturing out of China, for the most part, has done it. They've gone to other Asia countries, they've gone to India, they've done other things. So for the most part, like a lot of people that still manufacture in China, in many instances, it's not because like it's super cheap and the labor is super cheap and all those reasons. There's a lot of tariffs. It's because they have manufacturing expertise, a lot of automation. They're really efficient at doing things. It's not solely because they can do it cheaper, which I also feel like gets missed when you talk to a lot of the people on the right-wing side of things on this front. I don't know if you guys have any thoughts on that.
Well, small business cannot refactor their supply chain out of China very quickly. Now, consider how many merchants are on Shopify powered by Alibaba Express, for example. So Apple can refactor and spend a couple of $1 billion doing that, and they'll get by. I think it's difficult for others to do it. You're right. Like being bipartisan, hard on China makes sense. It's actually a global issue, not just a bipartisan issue. But unfortunately, the bilateral approach made it difficult to create a tariff wall on China, right? Europe is actually trying to cut trade deals with China.
Basically, what we're looking at here is U.S. manufacturing in the light blue is at a GDP in current dollars. In actual dollars amount is going through the roof. So is industrial production, real output, inflation adjusted. But employment is, falling through the floor, kind of. It was mostly flat. It's just been kind of is what it is. And I guess the goal of this administration is to increase that percentage, I guess, the percentage of employment that comes from manufacturing. Is that what that is, or is that number people?
That's the goal. But this is like very similar to the chart of agriculture, right? The beginning of the 20th century, 1900, 1 in 2 Americans had a job in agriculture. And then with technology, John Deere, Caterpillar, better fertilizer, nitrogen, know-how. Now 1% of Americans are in agriculture, and technologies is driving the same impact in manufacturing. If you go to a GM plant, you do see a lot of automation. I mean, Tesla's of course leading, but GM has plenty of automation and lots of robotics, actually. And it turns out private companies automatically invest in innovation and technology that improves product. You don't need to tell them to do that because they have a profit motive to do so. And it lowers their costs and it creates more returns for shareholders. This is just a top-down technocratic fallacy. It's the government saying they know better than private enterprise.
All right, Ram, why don't we go to Warren Buffett? So for those, I'm going to assume everyone listening knows who Warren Buffett is. If you don't know, he's one of the most legendary investors of all time. He is finally stepping down from running Berkshire Hathaway. I know, Ram, you wanted to talk about. You have a lot of thoughts.
Sure. Yeah, look, it's a sad day. At the end of his annual investor talk, he announced that he'll be stepping down as CEO of Berkshire Hathaway. There was a 10-minute standing ovation and applause. Classic Buffett. I mean, he ended with humor. He said, look, that applause can mean one of two possible things. Either they're happy to see him go or they're applauding him, obviously. And, classic humility too, right? Buffett is classic Americana, right? I mean, he's as classic as Cherry Coke, Dairy Queen, American Express, Wrigley's, and apple pie, right? And I was hoping one day I could take my kids there to go see him. They're too young, but it is a turning of the tide. He did comment on tariffs a few times, and I think Buffett has significant reputation and credibility, and people listen to what he has to say. People will outsource their thinking to Buffett. So Buffett had this clip around trade, which I thought was very insightful. And a different angle on the tariff story I'll hit play here.
And the United States, we've won. We have become an incredibly important country starting from nothing. 250 years ago, there's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and safer we'll feel, and your children will feel. So
that's the fundamental distinction, right? Either trade creates mutual wealth through voluntary gains, or it's a zero sum. Buffett is saying trade creates wealth.
In the US, people and the Republicans be talking about for, 2 decades, 15 years? I don't know. What do you guys think? There's so much talk against the globalists. And before it was okay, unconsequential is okay, whatever. They're like, who cares? But now they're finally putting that to work and going against globalization, which I think has been very good, and it's definitely not a zero sum. I'm on the side of Buffett here. And by the way, it's Buffett is it's crazy because I despise value investing, but he's still the most. I really admire him. He gets. There's only two people out there that I respect enormously in markets, and are Buffett and Druckenmiller. And Buffett is way above Druckenmiller. He's incredible.
Really? I mean, Druckenmiller had one losing year. I'd put Druck over Buffett, but I mean, Buffett's performance track record, longevity, perspective, and the ability to deploy that much capital and perform at that scale is incredible. The other thing I'd point out on Buffett is that, so the stock is down like 5% today. So the question is, does the Buffett premium pull out of the stock? I think it does. So Berkshire Hathaway trades at 2 times price to book value. And Berkshire Hathaway has a lot of cash and a lot of treasuries. So you're paying twice the price for cash and treasuries for that component of their balance sheet. The other thing I would say is that Buffett's style of investing, to Alex's point, is difficult to do now and today. If you look at quality companies that have a moat, they're all expensive, right? Costco's more expensive than NVIDIA. It's got a 50 times forward PE earnings ratio. So Berkshire Hathaway itself is more expensive than S&P 500. Where's the value there? So yeah, it's an end of an era. I don't think the next Buffett will be applying Buffett strategies, except in maybe small caps where there are still opportunities that have the kind of quality compounding traits that Buffett is looking for.
Yeah, I mean, Alex, I don't think I've ever heard somebody say that they absolutely hate value investing, which was.
Well, I mean, I went to Columbia Business School and studied a lot of value investing, and basically I've done a lot of value investing in my life, and I think it in most cases it costs people money. When I was in college, like the takeaway was basically long Walmart, short Amazon, because of valuations.
All right, that's enough about Buffett. Before we move on, let's just hear from our sponsors.
What could stop this year's bull market in crypto? In a word, politicians. This is Matt Hogan, the Chief Investment Officer for Bitwise Asset Management. Each week, I write a 5-minute memo exploring the biggest story in crypto. In this week's memo, I look at an emerging risk in Washington that threatens to derail this year's bull market. Check out my memo at bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
If you love the conversations we have here on Bits and Bips, you're going to love our brand new Bits and Bips newsletter. Our team will break down the key macro trends impacting crypto, the biggest market moves, and expert insights you won't find anywhere else. Whether it's the Fed, inflation, or major DAO proposals, if it affects crypto, we've got you covered. Best part, it's completely free. Stay ahead of the market and subscribe now at bitsandbips.beehive.com. That's bitsandbips.beehive.com. Find the link in the show notes.
Let's move on to the ETH pivot and the stablecoin bill. Which one do you want to talk about first? Alex, you choose.
I haven't paid much attention to either, to be honest, so pass it on to you guys.
I haven't paid too much attention to the ETH pivot. I mean, it seems like no matter what you do, whenever you're looking at anything ETH related, it just keeps getting worse and worse. It just seems very dysfunctional. But I mean, like even a couple of months ago, I was looking at this stuff and I was like, it can't get much worse, can it? And it just seems to keep getting worse and worse. So, I mean, at some point they'll hit a bottom. I don't know. Do you have any strong thoughts on this? Alex, last time we talked about ETH, you said short it, I think. What are your thoughts now?
I think it's not a good asset, to be honest. That's what I think. And on a relative basis, related to other crypto assets, I think anybody can outperform ETH by basically holding Bitcoin and Sol, or Bitcoin Sol and a few others like say Sonic, Tau, etc. This is a few. It's the barbell approach in this case is better, and people, I understand, they get very upset if you've been holding ETH forever. I mean, ETH right now is barely, what is it, 20% above 2018's January 2018, and usage is flat. It's flatlined. Revenue has flatlined. Maybe the pivot makes ETH do much better, and I sincerely hope it's the case. I want people who hold ETH to make money as well and be happy.
Ram, any thoughts?
Yeah, I do. You guys remember that Bezos transformation before and after? I'm going to share my screen so you can see it. It's where Bezos goes from like lean and scrawny to buff and jacked. This is it right here, right? You see it on the screen? Go up. The talic butyrin has to adopt a carnivore diet, go to CrossFit, lift heavy weights, listen to like some rock music or something, and that will create a bid for ETH. It's about the leader. Who do you identify ETH with? It's Vitalik, and Vitalik is passive behind the scenes. If you look at what Totali's doing with Solana, he's identified with Solana. He's articulating the message. Vitalik needs to play offense, and he needs to do a Bezos-like transformation.
It seems hard for him to do that, to be honest. Like he seems to have actually, he seems to be like a true. I don't know him, but he seems autistic, really autistic.
Yeah, I agree. He's probably gonna ask for it. If Bezos came out jacked, okay, with summer beach attire, and there were memes around Vitalik going viral, okay. Combine that with banks putting assets on chain and doing decentralized settlement, then you have something. But right now, the vibes are off. Half of crypto is about the vibes. The vibes are off. Yeah, he needs to become like his dad.
Yeah, so I mean, the whole push here, like they're simplifying the L1. They want to increase transaction and throughput on the L1. It seems to be, like from my outsider point of view, I'm not a crypto native, though I play one sometimes. Seems to be like they're heading in the right direction. But Katalin, what are your thoughts on ETH?
And I think if Ethereum's future hinges on Vitalik's charisma, then I think they're doomed. I don't think it's ever going to come out, and it is really lacking, and it would really help, but it is what it is, and the sentiment is terrible on ETH, and various things that might have been a catalyst that reshaping the foundation and pivoting and saying the kinds of things that moving forward, items on the roadmap that were far in the future, but they're moving it to right now because they're reacting to the environment. Like these might have been catalysts, and they weren't. The market's just not vibing with Ethereum right now, and I think what could change this, because they've kind of they changed the messaging, they changed the roadmap, they're talking about all the kinds of things that people have leveled as criticism against them, and this hasn't helped. And I think what we have to wait for is really when these major TradFi use cases really get going, that the administration is really behind and TradFi is really behind with stable coins and tokenization. Which platform will they really do most of the transactions on? And Ethereum still has the largest market share in all of these things, and the network effects are pretty hard to compete against in crypto. And on top of that, the security is ever important in these kinds of things. Like Solana just fixed another bug and so on. And I think it could be, of course, we don't know, we'll have to wait and see, but it could be that really the big TradFi volumes and use cases will still go with Ethereum primarily, and that will change the trajectory. But now the only things people hope for are, it's too oversold. It's time for it to bounce. The sentiment is too negative, and I mean that can of course happen just on the basis of sentiment, but in terms of fundamental drivers, the market hasn't beaten on anything that Ethereum put out since January.
More seriously, if the government can enable investment banks and banks to utilize a decentralized currency to tokenize move value, as opposed to what they're doing today, which are private subnets on AVAX, which is kind of like, what's the point? Because it's not decentralized, right? Then ETH gets a policy win. We don't have that yet. They should focus on that. Right now, ETH is caught in the middle. ETH was trying to position around ultrasound money, which never made sense. I was very clear it didn't make any sense. Bitcoin holds that narrative. And then Solana is leading with application layer and end user value delivery as opposed to infrastructure. So ETH wasn't able to cut through from that narrative perspective, and the policy is such that the banks aren't in a place to adopt it. Yeah, but that can change. I expect it would change. Why wouldn't it change? But
yeah, I mean, I'll say two things on this front. Samar Cohen, who's one of the way higher ups at BlackRock, talked about this and basically said, for the most part, it's their clients. They only really care about Bitcoin right now in the TradFi world. And then it's a distant second, but Ethereum is still second. That's what most people are looking to. It could be the case that Ethereum becomes, the institutional grade second base layer. Who knows what's going to happen there? But like from my point of view, it just kind of feels, Ethereum to me now feels very academic, which seems crazy considering like the NFTs and the different things that we see on there, what they're kind of known for. But it seems very academic, extremely idealistic, whereas like other things like Solana just feel like they feel way more pragmatic and way more user focused. And like I feel like there's just a disconnect there. Obviously, I'm not the first person to say things like this, but that just seems to be a problem. And seems like maybe they're going to be focusing more from a pragmatic point of view, but not fully. Anybody else have any thoughts on ETH before we go to the stablecoin bills?
Yeah, so I mean, this is something that's been on Twitter for a while, but if there's one place where I would support tariffs, would be actually on Ethereum to put some sort of tax or higher, like tax the L2s to try to bring some value into it, because it's getting vampire attacked in a way by its L2s are like parasites in a way, if you think about it. And they could address that thing very fast.
But yeah, I think they're thinking about things, not exactly that, but basically where they shift the economics back towards the L1. And the other issue is that the narrative is so badly shaped. And for Solana, it's so well done, because actually, in terms of value leakage, Solana has kind of a similar problem that Ethereum has with the L2s. Solana has with value going to the validators and not to the tokens. Actually, Solana earns currently double the fees of Ethereum, but half of the revenues.
If only Joe were here, he'd be bashing. He'd be bashing a lot more than anyone.
Yeah, we can move past ETH, but like ETH is a marketing problem, and there's a lot of genius behind it. ETH technology infrastructure approach.
That's let me say, so back to value investing and connecting value investing with crypto. If I would have gone with value investing, I would have been out of Sol in the 20s. It was overpriced in the 20s. I don't even want to look at any numbers right now, because it's quite likely, even after basically the meme coin volume being down so much, I'm pretty sure it's from a fundamental metrics perspective, traditional, like for example PE, it's very overvalued. And who cares?
Yeah, no, I agree, Alex. I mean, crypto is fundamentally a momentum asset. So the asset that has momentum has the attention, it attracts the bid, and then it goes and it sucks the capital, oxygen, liquidity out of the room. That's what it's all about. That's fundamentally what all crypto assets are about. It's not backed by free cash flow and buybacks. It's about attention. These are attention markets.
Yeah, one of the things I hear like constantly talked about in the crypto space is like we're going to apply multiples and valuations to these things, and I always think back to that Silicon Valley show from HBO where the guy's like, you're pre-revenue. Once you have revenue, it's never good enough. And like I just think people are like, we're going to value these things. Look at the cash that are spinning off of these things, and I'm like, if we value these, these chains, these protocols based off the cash and the cash flow that they're earning, they are trading at insanely rich multiples. And I think Bankless actually had somebody on, I'm forgetting what the guest name was, but he talked about this whole process of like, we shouldn't be thinking about this and you shouldn't be trying to revenue. And it's like, yeah, because things will go to zero if you look at fundamentals. Like there are
one of the most interesting crypto assets is Doge right now, purely because of technical momentum. And this is a guy that values free cash flow, buybacks, relative valuation, quality balance sheet mode. But like, you got to think about crypto differently. It's momentum. It's a momentum asset.
I think we all agree. I don't think anyone disagrees here. I think Katalin, we completely agree with you on this one. We're already almost an hour into this. Let's get to stablecoins, because I feel like that's probably the biggest topic that we haven't talked about yet. There's a few other things we can get into, but yeah. So stablecoin bills, essentially the whole story is a group of 9 U.S. Senate Democrats have reportedly pulled their support for a bipartisan stablecoin bill. This one's the Genius Act. 5 of them previously voted to advance out of the committee, and 5 of those 6 of them are on the Senate Banking Committee, so they can actually really hold this thing up. It seems to be like they're just not getting the things they want out of the stablecoin bill. My overall view, I should have talked to my our policy guy that I know down in DC who works in my department. He's been very confident that some sort of stablecoin bill is going to get passed. Overall, I just think it's kind of insane that we have like the Democrats now kind of siding with the big banks when it comes to this types of stuff and the regulations that they want. It's like, it seems insane to me from somebody who kind of agrees, and like why it almost seems like we don't want to, it's either we get exactly the regulation we want or we don't want it to be regulated and we're going to push it offshore. So I don't know. I have to assume they're going to get something through in the next few months. I feel like they're so close, but who knows what can happen. But I don't know. What are your guys' thoughts on the stablecoin bill? Do you think it's going to get through here? Do you think any of this matters? What are your views on the Democrats kind of pulling support here?
No, I have no views. Yeah, Ram?
I think politicians will keep crypto as an hotball issue for as many years as they can to extract as many political donations from Fair Shake PAC. That's what's going to happen. They could have passed stablecoin in the last administration because it had bipartisan support. I think people have too high expectations of elected officials representing their interests. They'll get some wins on the board, and yeah, I think Stablecoin Act will get done. But the way DC works is you got to have some conflict. You got to have some dopamine to motivate a base to raise funds for their election. You got to have an enemy.
Let's say on the stablecoins thing a little bit here. I'm assuming you guys saw the news about Ripple trying to buy Circle, and they went up to a $5 billion offer, I think, possibly higher. But like, I guess, what is your thoughts? So Ripple has obviously a massive war chest of XRP that they own. They own worth many, many billions of dollars. They could pretty much buy anything they want, as far as I'm concerned.
I think they hold 40% of the supply. I wanted to check.
Yeah, they own something like near 4.5 billion XRP, which is like 90 something billion dollars, if that number is correct. which is just absolutely fascinating. But I guess, what are your thoughts of them trying to buy Circle here? I mean, they bought a prime broker, essentially, I think is what they bought most recently. It seems like they're kind of on a buying spree. Do you have any thoughts here, Ram, on Ripple offering to buy Circle?
I mean, Ripple's trying to get a real asset, right? So in that sense, there's a logic there. It reminds me of AOL at an inflated valuation trying to buy Time Warner in the dot-com era. AOL was buying a real business with an inflated market cap. I think that's what the case is here. The ultimate owner of Circle should be a bank, because a bank can rehypothecate, right? Circle's in the business of earning net interest income, and you can amplify the net interest income you make if you have a bank and you can rehypothecate, and you only need to capitalize your balance sheet with 10% of equity. If they got bought by a bank, they'd be valued like a bank. That's the conundrum here. Coinbase has thought about it too, undoubtedly, whether they should become a bank or not. It's great for your net income, but it's bad for your valuation.
Yeah. All right. I don't really have any more thoughts on that. It's just interesting. Like, the way I think of XRP is they were always pitched as, they were going to need a back end of financial infrastructure. You're going to move XRP around to move money around. My view is, like, stable coins have largely been like, that's where they fit. Like, what XRP was originally going to do, what I heard about in 2017 and even prior, is now, like, stable coins can fit that bill, right? Stable coins have that market. They have product market fit. It's the one area that works. And so now Ripple or XRP is launching XRPL, their own stable coins, trying to buy Circle. It kind of makes sense. If all these assets, they're in there for trying to go after Circle. I think you're right, Rob. It's a real asset. The only other thing that I wanted to point out, I don't know if you guys have any other thoughts, but the one I wanted to bring up was some news that came out today, which basically said that it was real that FinCEN explicitly told the prosecutors of the Samurai wallet, which DOJ basically said that Samurai wallet wasn't a money transmitter due to its non-custodial design. And then the DOJ prosecuted those developers anyway, and kind of like didn't use, they suppressed exculpatory evidence that would have gotten Samurai wallet kind of off, because FinCEN was saying it doesn't fit what you're trying to do, which is absolutely fascinating to me. It's kind of like everyone in crypto was like, this is insane. They're going after somebody that doesn't have custody. And it's like they actually went to FinCEN, and FinCEN explicitly disagreed with their thesis, and then they went and brought the case anyway, which to me, and then didn't bring up the fact that FinCEN, they hid the fact that FinCEN explicitly told them they disagreed. So obviously I'm not a lawyer, but it's just like fascinating to me. Like, I don't know, I feel like somebody should get in trouble for this type of stuff. Do you guys have any thoughts here? I don't even know if you saw this news. Alex, did you see any of this? Do you have any thoughts here?
No, I didn't see it. I mean, I can keep on going on Ripple for a long time, but no, I didn't see the news.
Wait, what were you going to say on Ripple? Let's hear it. I just wanted to share that news at the very least on the Samurai thing, because I mean, if this news is accurate, I think that's, one, fantastic for Samurai wallet, and two, just a bad look for the DOJ under Biden. Alex, what were you going to keep going on Ripple?
So on let's say you have the good side and the bad side of the force, right? On the good side, what these guys have is they have a lot of money, they have a very capable team, and they can find ways to drive value into XRP when the time comes. They can. It's in their fingertips. And like one of the main reasons why XRP, I think, has been doing so well is because it's a matter of ownership and flows. Pretty much XRP was, until recently, not allowed to trade, and it couldn't be traded. It was delisted from all the exchanges in the US. So it's the same way ETH was over-owned, like pretty much everybody in crypto owned ETH. Almost nobody in crypto, all the crypto natives, they didn't own XRP. On the bad side, it's kind of like they are very good at what I call nowadays gaslighting. They tell you, I mean, they've been telling this narrative of Ripple replacing Swift since I have memory, and it's the same stupid, sorry my French again, it's the same thing over and over and over again. Yeah, I can get very harsh there, and I'd rather not do it. But yeah.
I literally saw in your face the wheels spinning in your head, and you like there was a devil and an angel on each shoulder. And
Yeah.
you're like, I'm not gonna
And
go there.
I do trade XRP every now and then. I hold it for X amount of time and I sell it, right? But you know, I wouldn't invest long term on XRP or actually almost anything, to be honest, in crypto.
All right. Any other thoughts there, Ram?
Well, it just tells you how much money's in the system, how much liquidity is in the system when you look at these assets that have these significant market caps. And I mentioned earlier, Berkshire Hathaway is valued at twice its book value. Warren Buffett does not like buying businesses that trade materially above book value. So I think that's really what it is. We are in the post-COVID market economy where retail investing plus social media plus TradingView plus community has transformed how markets work and how assets are valued. And it's a one-way door. So we're not going back.
One more thing that I wanted that we should talk about is the fact that the Apple App Store is now going to allow NFTs and crypto sales from within like the iOS ecosystem. Kind of seeing. Do you guys have any strong thoughts on this in either way?
I just think that it's going to drive a lot of dApps to basically start generating revenue. I think it's very good, and in fact, it's something interesting that conceptually once. A crypto founder once told me how basically in crypto blockchains they basically they pay developers to come and build in their blockchains, and when you go to Apple, it's exactly the other way around. They have all the power. So it's not only they don't pay you pay out of your extremities, you know. So that's changing now. That's good. It's very good.
I think it's just another trend of, more mainstream acceptance of this space. It's not going away at this point.
We're in a funny world, right? Like Berkshire is losing Buffett and Dave Portnoy is rising in influence, right? I mean, isn't that the symbol to look at? Portnoy about a month ago had a video on tariffs that went viral, which I thought was fantastic, by the way.
Yeah, he was right.
But yeah, he laid out a wonderful, pragmatic, easy to understand critique of tariffs. And then this weekend, he had a viral video on anti-Semitism at a bar he owns in Philadelphia. I'm like, man, the guy, he's good. Like Portnoy up. I'm not like a Portnoy fan, by the way. I'm just like, Buffett is in recession and Portnoy is in a session. This is the changing of the guard.
You could short Berkshire and long Portnoy's shitcoin.
I don't think I would go long Portnoy's anything. But
yeah, he was launching a bunch of meme coins. I don't think he's doing that anymore.
It all went to zero.
The funny thing about Buffett is he was the first to actually understand community. When you think about how many tens of thousands of people descend upon Omaha, and there are people that go there every year like a religious pilgrimage, and they enjoy cherry Coke and all the different investment companies that Buffett invests in, like See's Candy. They're there. You load up on 4,000 calories of fun, and it's about community. And what we're seeing now is hyper community, hyper financialization, hyper everything. Berkshire was the first
hyper liquid
influencer, right, for financial markets. You got hyper liquid, hyper this. So, and now we're at the Portnoy level. Like this is where we are now.
Yeah. I'm curious to get your thought if either of you have any. So for anyone who's paying attention to real markets, the Taiwanese dollar is ripping essentially. Like, do you guys have any thoughts there and any implications that could mean, or is that just volatility and low liquidity in markets generally speaking, or do you guys? I don't know if you have any strong thoughts. Rob shook his head no.
I don't. I've been reading about it a lot, trying to understand. Is like what I've noticed is that actually nobody knows. Yeah, there's a lot of theories and about basically Taiwanese selling dollar assets. There's a lot of theories, but something I wanted to point out here, which I think is very interesting, is on the Hong Kong dollar side. This, by the way, that what's happening with the Taiwanese dollar is happening all across Asian currencies right now. It's basically they're strengthening against the dollar in the last 2 weeks, and particularly the last one. And the Taiwanese is the one that is like a 19 standard deviation move, so everybody's talking about it. But and it's very interesting for chip makers, NVIDIA, etc. Now, I wanted to quickly point out the Hong Kong dollar. This is actually funny. You have someone who basically Kyle Bass, right? Someone very vocal on Twitter against China and Hong Kong for over 15 years. And he has this short Hong Kong dollar trade forever, maybe 6 years, right? He's been talking about it. It's an expensive trade to keep open because you have to fund it. And he finally has his wet dream, which is basically an ultra hawk U.S. administration. And what happens to the Hong Kong dollar? It goes the other way. It's threatening to break the peg, but on the upside, so dollar honky down, not up.
100%.
Which is like, I mean, yeah, it's the irony of markets. They can really fuck you up, even when you get it right, and then yeah.
Well, he was short JGBs too, right? Japanese debt as well, saying, look, hey, rates given their fiscal picture have to be much higher. He was in that for 10 years also. It's like, would you rather be right or make money? He'd rather be right. And one day he'll be right, 12 years later. And you'd be better off not having done what he did and just bought T-bills. Ideology, not a profitable strategy.
Yeah. The last thing I'll say is there's rumors that we could be seeing, an instituted, tariffs on chips, actually, despite them being carved out previously, and now they might actually be coming back. That's rumors.
That's concerning. Like, what the hell? How do you win the AI race if you're going to have tariffs on GPUs that you're importing from Taiwan? How do you win that race? That would impact all of the hyperscalers, which are spending tens and tens of billions of dollars on this. Microsoft and Meta both reiterated the capex. Microsoft has trillions of tokens that they've sold in the last quarter. The AI product market fit is there. So if you have all these Mag 7 hyperscalers now having to have a 25% increase to their capex, that would absolutely hurt their stock prices. I mean, that would be bear market right there. Now, we don't know that that'll actually happen. That's just reported news. Over the weekend, I saw a random news site in Taiwan say that NVIDIA is thinking about putting Bitcoin in the balance sheet. I think that's BS, right? Yeah. So this is, we just need to see where the actual policy lands. We don't know. I don't think Trump knows either. I think he wants it to land somewhere, but he's getting pushback from markets.
Thanks for joining us for this episode of Bits and Bips. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Until then, everyone.